Bitcoin. Are we in a bear market, or is this just a cool off before we begin the super cycle and run once again? Well, this week decides everything, as a world superpower is going to make big decisions regarding Bitcoin, crypto, and everything in between. What's going to happen? We'll find out in just over 10 minutes, because it's time for Chico Crypto. Well, there is no doubt the current state of the crypto markets is bearish. For the past 4 months, the bears have had a hold. Since the beginning of November to today, it's been a series of lower lows and no higher highs. So is this just another extended bear trap, or is this a full-on bear market and we are in the denial stage? Well, the last time we had an extended bear trap was just last year, the last time we broke above 60K. That bear trap lasted from April 12th to July 20th, when we hit the official bottom of 30K. This was 100 days. Now, when we were last above 60K, the November 8th high to yesterday, the 21st of February, we are 106 days into this bear trend. But if the bear trend has already ended, our bottom would be a month back on January 22nd when we hit 35K. That would mean this bear trap only lasted 75 days. I would like to draw some lines here, lines there, lines everywhere to predict where we are going to go. But personally, I think we could be going a bit lower and retesting 35K, and then maybe even a quick candle down to 33K or 30K to set up the ultimate trap and those shorts. A crypto ISO tweeted a certain chart saying permission to take topside liquidations. Now, what does this chart mean? Well, it shows the cumulative sum of the liquidation levels between long and short positions. As we can see, there is over 1.6 billion in total shorts that can be liquidated since the fall from 45K. That is a lot of money on the table and is much more than what can be made liquidating the longs, as there are barely any. Although, like I said, we may be going down a bit more, and that will be the ultimate setup, getting those stinky bears right where they want them before a big candle spike back up. Now, there has to be a narrative, a reason for the markets to sink. Of course, they can do it out of the blue, but with a narrative, the setup becomes that much more sweet. What is the narrative they will use to sink the markets this week? A regulation narrative, specifically from my country, the good old US of A. President Biden is expected to release an executive order on crypto this week, which includes a whole lot about a term the crypto markets do not like to hear about: regulation. Even makes me shudder a bit hearing it. But let me tell you, this order won't be as bad as people are expecting. Some people are thinking it's going to be a death nail to the crypto markets, with overreaching regulations, which will be a death nail, with some even predicting an overall ban like what China did. Well, that's not going to happen, and it's not going to contain much. Why? Well, we just need to go to the initial press release to see exactly what is coming with this executive order. Bloomberg were the ones who dropped the news almost a month ago in late January. As we can see from their article, they say, the late-stage draft of the executive order details economic, regulatory, and national security challenges posed by cryptocurrencies, said the people who were asked not to be named discussing internal deliberations. It would call for reports from various agencies due in the second half of 2022. The various reports calling for regulation on crypto aren't even created or written yet. With the executive order, they are just asking the government agencies who would be involved to construct their reports and have them due by the end of Q2 2022. The crypto doomsayers be damned. This will not contain anything groundbreaking or new. It's just laying the road for regulations that will come down the line. The article goes on to say, one such study would come from the Financial Oversight Council, a group that includes the heads of Washington's top financial watchdogs, looking at the possible systematic impacts of digital assets. Another government report would look at the illicit uses of the virtual coins. Meanwhile, the directive would also require other agencies to weigh in, carving out roles from everyone from the State Department to the Commerce Department. Some of those tasks will be meant to ensure that the US remains competitive as the world increasingly adopts digital assets. Reports, once again, just diving into the reports that will come down the line. They will not be released this week, but will be released this year. But also this would require roles to be carved out in the federal government, digital asset roles. Now, if that's not an endorsement for cryptocurrency having specific roles within the federal government tied to digital assets, I don't know what is. This is about as mainstream as you can get. Although there is one federal government agency I'm sure many people are worried about, and that is the IRS. There hasn't been any news regarding any new regulation from them in any media publication, but it's possible they're looking hard into crypto taxes. Although you shouldn't be worried if you are keeping up to speed with your own crypto taxes. And before we continue our regular content, it's time for a sponsored segment of this video to keep you up to speed with your crypto taxes. Brought to you by the team at CryptoTaxCalculator. And like always, the details of our arrangement can be found in the description. Uncle Sam is watching. The ICO boom of 2017 forced governments to start taking cryptocurrency seriously. And after all the headlines for millions being made by individuals during DeFi summer and the NFT boom last year, you better believe the IRS and other world governments are coming down hard, making sure they collect their share of taxes owed. The IRS will go after investors for unpaid taxes and have made it clear ignorance is not an excuse for not paying your taxes on crypto or NFTs. It's crucial you take personal responsibility in reporting your crypto activity and pay your taxes to avoid long-term issues and costly penalties. It doesn't matter if you're a crypto millionaire or have only been trading a short time. We are all held accountable to the tax man. So thank goodness for products like CryptoTaxCalculator.io. Since 2018, CryptoTaxCalculator has been helping investors, traders, and accountants in 21 tax jurisdictions confidently analyze their crypto trades, and they hands down are the industry's most simple, straightforward, and effective crypto tax tool to help identify, track, and organize all your crypto activity with ease and accuracy. And we're talking about all of your crypto activity. They have over 400 plus integrations, including with all major centralized exchanges. All DeFi activity, including DEX trades, leverage trades, staking rewards, yield farming, airdrops, derivatives, layer 2s, NFTs, and even mining. Let's face it, dealing with your taxes can be a total nightmare, considering the complexities involved with tracking every transaction. But it doesn't have to be that way. With CryptoTaxCalculator's user-friendly UI and intelligent automation, you can complete your taxes in 3 easy steps. First, simply add your wallet addresses and exchange data with their API and CSV integrations. Step number 2, next you'll let CryptoTaxCalculator do the heavy lifting with their algorithm, ensuring your transactions are accurately analyzed and calculated with a full breakdown, so you can customize everything to your specific needs. And finally, step number 3, you let them generate the detailed tax reports for you, providing you a clear understanding of your realized capital gains and income. And filing couldn't be any easier. You share the site access directly with your accountant, or you can even upload directly to your favorite tax software like TurboTax. Whether you're a noob or a full-on degen trader or a professional CPA, CryptoTaxCalculator has an appropriate and affordable plan to fill your needs. Tiers start at $49 a year and go up to $299, with the difference being how many transactions are supported. And all plans give you access to every financial year you've made a trade in. And all plans have 30-day money-back guarantee. You can also check out their software for free. No credit card details are required. So, CryptoTaxCalculator is the ultimate and most trusted cryptocurrency tax tool on the market. Their site stays up to date on the latest rules, regulations, and tax forms, and they provide super helpful and accessible customer support to help answer any questions while using their software. If you trade crypto, don't find yourself in a mess down the road. Take responsibility and pay your taxes on time. And with April 15th right around the corner, CryptoTaxCalculator is blessing my viewers with a special 20% discount to use their product if purchased within the next 14 days. To do this, simply follow the link in the description or enter the code CHICO20 at checkout. Now back to that executive order and why it's not going to be a death nail to the crypto markets. The final thing mentioned in the initial Bloomberg article regarding the order was the CBDC, a central bank digital currency. They said, the administration is also expected to weigh in on the possibility of the US issuing a government-backed coin, known as a central bank digital currency or CBDC, the people familiar with the talk said. But according to one of the people, the administration is likely to hold off on taking a firm position, as the Federal Reserve is still considering the issue. Well, that looks to be holding true. Just last week, Bloomberg reported that Yellen and the White House were split, slowing the arrival of the crypto strategy. Now, why were they split? A CBDC. The article says, Yellen views the plan for an executive order as unnecessary, particularly any mention of a central bank issued digital dollar, according to two of the people. The Treasury chief and her team say the Federal Reserve, which released a report last month, are still working on the topic and should be allowed room to develop its thinking. Well, over the weekend, PC Gamer reported that Biden wanted to know more about cryptocurrencies, including Bitcoin, before creating a digital dollar. So there are no plans for a digital dollar this week. So what is going to happen this week? Well, this will happen. Government agencies such as the Department of the Treasury and Homeland Security will be tasked to address many of the issues and concerns that arise when dealing with digital currency on a serious level over the long term. They are just tasked with creating reports. No specific rules or regulations will be announced. Also, financial institutions such as the SEC, IRS, and the Federal Reserve will be looking into market protection measures that fall under their jurisdictions. Other agencies like the Financial Stability Oversight Council will examine financial stability issues that come with nations dealing with crypto. Again, these government agencies will just be tasked with creating reports, which we won't see until later this year, sometime most likely in the summer. In the summer, once these reports are released, is when we should start getting worried. But still, even if there is new regulation or laws they look to enact, they still need to be written up, put to votes, and passed. This will definitely take some time, and I wouldn't doubt that any of this new regulation will see the light of day until at least next year. So, my friends, the powers that be are going to use this narrative to create a spook in the markets. And I wouldn't doubt by today we are already seeing the downward trend start. But this is just all a part of their plan to set up those shorting bears for when the executive order does come and it's a nothing burger, a green candle will liquidate them to the depths of crypto hell. Cheers, viewers. I'll see you next time.